Shares of Walmart are lower right now. The retail giant reported better than expected fourth quarter profits and revenue, but issued weak full-year guidance. Joining us now, Rupesh Parikh, Oppenheimer Managing Director and Senior Analyst. We did point out, we did point out that, you know, the valuation is not cheap for Walmart. It's had a great run. So maybe we don't want to read too much into an 8% pullback other than, you know, the stock has really been on a tear. But are there things that in the report that were troubling to you or at least disappointing from your expectations?
Yeah, so thank you for having me. I think this is really just a case of really high expectations. So as you look at the report, they had a very strong Q4, broad-based momentum in the U.S., you know, whether it's health and wellness, grocery, general merchandise, all positive. International markets, even in China, you know, they grew 20% plus. So, no, strong all-around quarter. As we previewed here, I mean, this is really a case where investors got ahead of themselves. The Street was already modeling double-digit EBIT growth for this year, and, you know, they guided more to a mid-single-digit type level. So if you look at Walmart, historically, they guide conservatively to start the year, and then what we saw last year is they guided maybe closer to 5% operating income growth, and they end up doing double. So I think it's very much the same situation. They're just grounding expectations here, but there's really no blemish in this report. So I think it really is high expectations, and what you're seeing this morning is just some profit taking.
And what has competitively, what initiatives has Walmart? I mean, it's a lot of grocers now, obviously, but Amazon, the elephant in the room, and is there progress made there? Any disappointment in any of those metrics?
No, it's like they've all came in really strong. E-commerce growth is very healthy. Advertising continues to grow 20% plus. Membership growth also double digits. So, you know, you look at all these key alternative revenue streams, they remain very robust. So no, there really wasn't any blemish there. And, you know, you look at last quarter, 1/3 of their operating income growth, you know, came from both membership and advertising. So I think, you know, we'll hear on the call that just started what that level is for Q4. But everything what we can tell here is that all these alternative revenue streams continue to ramp very quickly. And when you look at these higher revenue streams like advertising, it's a 50% plus operating margin versus Walmart's core business, more in the mid-single digits. So these higher profit streams are really the big positive, you know, for the story going forward.
Is there anything you can say about consumers, high end, middle, low end from the report? What can you glean from that?
So in this report, they said they gained share from all income cohorts. So for Walmart, the wealthy consumer is where they've been gaining the majority of shares. Those consumers making more than $100,000, and it seems like that was the same case this quarter. And, you know, as you look forward, inflation seems to be picking up again. So, you know, it again plays into Walmart's wheelhouse. So I think, you know, if you're in a high inflation backdrop, Walmart will again win in that environment. So for those retailers that have been struggling and losing share to Walmart, it doesn't seem like that dynamic is going to change in the short term.